Hey everybody, deep breaths. It's been a very rough one, to say the least. I think, like many analysts and many investors and traders today's been a tough pill to swallow for sure. Uh, but I think this is also a pertinent time to stay grounded. Um, I think in my 7 years in crypto, there haven't been many days like today. Uh, and I think it's pertinent that we hold these crypto market recaps because these are the days when fear overrides uh, every sort of emotion, right? And that's exactly what we're going to be unpacking today. And if you see me looking towards my right, it's because I have a monitor set up and I'm constantly tracking the prices as we go along. So just bear with me there. Uh, Now, before we get into everything, welcome back to another weekly Cryptopolitan Market Recap. If this is your first time joining us, welcome. I know it's a brutal time to be joining us. Uh, and if you've been tuning in week after week, genuinely, thank you for being here again and again. Now, before we get into the markets, I want to start by saying we're doing things a little differently this week. We're streaming simultaneously across multiple platforms. Um, so you might be watching us on YouTube, Twitter, LinkedIn, or Facebook. You're all part of the same conversation today. Okay, let's just get grounded right away. This past week in crypto has been brutal. There is no sugarcoating it. We are very clearly in a bear phase. The early momentum that we had coming into the year has completely faded, and over the last week, that slowdown has only accelerated. And I want to say this plainly, for a lot of people, this move has been genuinely frightening. Portfolios are down. Key levels that many of us were watching have now been broken, and sentiment right now is heavy. So, if you're feeling uneasy, especially today, if you've been second guessing positions or even just questioning the broader direction of this industry, you are definitely not alone. And for those of you who've been joining us on these streams week after week, you'll probably already sense this, but today's show is going to be a little different. We need to have a real conversation about what the data is actually telling us about the future of this industry, especially through days like this. Uh, See, the thing is, markets move on psychology, it moves on liquidity, narratives, and sometimes fear. Right now, fear is very much part of the equation. So, over the course of today's stream, I'm going to walk you through a few key things. Uh, Firstly, I'm going to go ahead and talk about the major levels Bitcoin has lost now. Not just technically, but structurally, why those levels mattered and what it means now that they're gone. Then we'll dig into the data points and macro factors that help explain why this correction has been this deep and so fast over the past week. And finally, we'll talk about where the market could realistically find some support. Uh, Again, I want to be upfront with you. This is not an easy stream to host. It's always much more comfortable talking about breakouts, new highs, and upside targets. It's much harder to sit here when warning signs start flashing and say, we need to start paying attention. But I genuinely believe that this is the responsibility that comes with doing these recaps every week. Now, if I see risk building, if I see cracks forming, then I think it would be wrong of me to stay quiet or gloss over it just to keep things upbeat. These streams aren't here to tell you what you want to hear. They're here to help you see the market more clearly, especially when things get this uncomfortable, right? And look, this doesn't mean the industry is dead. Uh, it doesn't mean crypto is over. And it definitely doesn't mean, innovation stops tomorrow, right? But what it does mean is that we are entering a phase where discipline matters a lot and where understanding risk becomes more important than chasing returns, right? Now, I think with that said, let's get this one started with an analysis of Bitcoin and where we are right now. Because I think this is very key before we go on to the factors and that have actually caused this decline. Okay, so over the past week alone, Bitcoin is down nearly 20%, right? Well, yeah, over 20% now. Um, and what we've also seen during this time is the deepest drawdown of this cycle so far, right? Because the prices have accelerated so fast to the downside. Uh, this is currently the deepest drawdown we've seen, right? From all-time highs, now Bitcoin has corrected by roughly 45%. During this drop, we didn't just lose price, we lost some key technical and on-chain levels that have historically acted as a sort of strength barometer for Bitcoin. And I want to spend some time talking about this. Okay, so let's start with the technical picture. Firstly, Bitcoin has now decisively broken out of the, if you see here, the parallel channel that we were in for over 75 days, right? Since November, we were in this channel and it broke this past week decisively, right? And I think this is something that we need to talk about because there was a very well defined structure. And once price lost the lower band, which was around 80.5K, things accelerated extremely quickly to the downside. That level in particular is one we had been consistently warning about over the past few streams. Now, once that floor gave way, the market didn't hesitate, right? Now, the question becomes, why did prices fall so fast? The answer here is leverage, right? It's leverage, guys. That's the short answer. Now, January 31st, if you see here, marked the single largest liquidation event we've seen since uh, the October 10th cascade, right, last year. So on that day alone, on January 31st, 2.56 billion worth of positions were wiped out, making it actually the 10th largest liquidation event in crypto history. Now, to put that into perspective, this was larger than both the March 2020 crash and the FTX collapse in terms of liquidations, right? And I think here's what makes this particularly remarkable. This happened during a period where Bitcoin was already undergoing one of its largest deleveraging phases. So after October 10th, people actually stopped opening as many positions, right? So aggregate open interest today is actually half of what it was from the October all-time high. So on the surface, it seems a little counterintuitive, less leverage overall, yet one of the biggest liquidation events ever, right? But this is where it gets important, right? The explanation isn't about how much leverage existed. It's about where and how that leverage was built. Now, again, for nearly 75 days, Bitcoin was within that zone, 95K to 80K. Now, this kind of range environment does something very specific to traders, and it actually sort of encourages people to fade the extremes, increase position sizes, uh, tighten liquidation thresholds, basically under the assumption that volatility will stay suppressed, right? Now, over time, this creates a dense pocket of liquidity, fragile liquidity, and leverage. So, when Bitcoin finally broke below that lower end, the unwind wasn't gradual, right? It led to this cascading liquidations across similarly positioned traders, right? Now, with Bitcoin currently trading at 67.5K, Uh, what this effectively means is that all of the post election gains we saw since November 2024 have been completely erased, right? And from a charting perspective, it looks bleak, right? There's no two ways about it. Uh, we've lost the 100-week moving average. And I want to pause here because yeah, this is a huge sort of indicator that we have lost. Historically, outside the 100-week moving average, Bitcoin has tended to stay below this range for anywhere between 182 to 532 days, right? So it is a key indicator and level that we have now breached. Okay. Now, shifting to on-chain data, the picture tells a similar story, right? For the first time in nearly 2.5 years, Bitcoin has broken below the true mean price, right? As you can see right here on the chart. Um, the true mean basically considers both realized price and investor cost basis, right? It represents a kind of fair value where long-term holders are on average neither euphoric nor distressed, right? Now, breaking below it suggests that a growing portion of the market is now severely underwater, and that stress is starting to spread beyond just short-term traders, right? Now, to back this on-chain signal is another signal uh, which is flashing um, right now, and it indicates that pain has arrived. This is basically looking at supply in profit. Now, if you go back to last year's peak, around 19.8 million BTC were in profit. Today, that number has fallen to roughly 11.1 million and possibly lower now because this tweet is, almost a day old. That means nearly 40% of all profitable supply has been wiped out. And in simple terms, around 8.7 million BTC were bought above current prices. Millions of holders are now underwater, essentially. Uh, Historically, when supply and profit moves into what's called the bottom discovery zone, as you can see, it marks a sort of transition from a normal correction into something more structural. And I think that's what we have seen now. There has been a full cycle reset. Uh, Now, in past cycles, Bitcoin has spent extended periods in this zone. The longest, as you can see, was in April, or rather, it was in 2018, where we remained here for nearly 8 months. Uh, this is where fear peaks, and this is essentially where patience is tested. But it's also worth saying this clearly. Historically, this is also where some of the best long term risk to reward setups have emerged. I just want to stress that nothing here is guaranteed, but again, it's important to share the context of where we are right now. Uh, yeah, so look, I know everything I've shown you so far looks heavy, it looks bleak, me even having to display these charts while looking at the price action and explaining to you all where we are, it looks bleak, right? Uh, but as analysts, I think we can't dwell only on what's already happened. That's a huge mistake. We need to prepare for what future scenarios might look like. And that's why the next step is important, right? We need to shift our focus now to potential support zones and talk through what matters from here. Okay. Okay. So, where could Bitcoin realistically go from here? It's already retraced some key levels, like I've mentioned, but where can we go from here? And I want to be clear here when I say this. There are multiple levels that Bitcoin can retest in a market like this. There's no single magic line in the sand. Instead, we look at zones that have mattered historically and structurally. The first level I'm watching closely, uh, it has been breached now at the time of this live stream, is the previous cycle's all-time high, which is around 69K. We need to see whether we can close above 69K on the daily and definitely on the weekly time frame. This level just matters a lot for a few reasons. Psychologically, obviously, former highs tend to act as a strong reference point, but structurally as well, this is where the last major bull cycle topped out before the reset. And markets usually have a habit of revisiting those levels, especially after large deleveraging events like we've seen. Now, below that is the next major level, which we could likely test. And this is the 200-week moving average, which currently sits around 58K. Uh, I know it sounds horrendous. Like, how can Bitcoin reach 58K when we were just at 90K a couple of days ago, right? But these are the facts. Right? This is one of the most important long-term indicators in Bitcoin's entire history. Across cycles, the 200-week moving average has consistently acted as a deep support zone during periods of maximum stress. And this is where I want to bring in someone whose work I personally respect a lot, Benjamin Cowan. Um, he has summarized this dynamic very cleanly over the years. And I think it's worth repeating here because it aligns almost perfectly with what we're seeing right now. Um, in simple terms, his observation is this, right? When Bitcoin drops below the 50-week moving average, it tends to move towards the 100-week moving average. It spends some time there and eventually tests the 200-week moving average. Now, as you can see in this picture right here, when you look back at the last three market cycles, this pattern has played out remarkably well and consistently. We've already lost both the 50-week and 100-week, and historically, that puts the 200-week firmly in focus. Okay. Now, the next major zone that I'm looking at, and it also closely aligns with the 200-week moving average, is the realized price, Bitcoin's realized price. This currently sits at around 56K. Now, very briefly and very simply, this basically reflects the average cost basis of all coins in circulation. When price approaches or dips below it, it tells us that the average participant in the network is either at break even or underwater. Okay. So historically, that combination, the 200-week moving average and realized price converging, has marked some of the most important long-term inflection zones for Bitcoin. Okay. So if we're talking about bottoming scenarios, I think it's reasonable to say that the 69K first, that's the upper end. We need to sort of see a confirmation or a daily close. Better if it's a daily close, but worst case scenario, if we don't get the weekly close, that's a danger sign for me. Following that is the 56 to 58 key region on the lower end, which basically represents the two most important zones to be watching right now. Um, that does not mean price goes straight there. It does not mean we tag them cleanly. But I do think it definitely does not also mean timing is easy, right? Now, from a structural and historical standpoint, those are the zones where long term attention naturally shifts. Now, after laying out these levels, we need to talk about why this sell off is happening, right? Because it could extend. These factors could have a long term implication on price, right? Because leverage alone doesn't explain everything, right? We already discussed the leverage unwind, and there's no question that it played a major role in accelerating this move. But leverage was ultimately just the fuel, right? It wasn't the spark. What we're seeing now feels more like a sort of confluence or convergence of different pressures all hitting the market at the same time. Now, firstly, we have macro uncertainty. So, one of the immediate pressure points has been escalating tensions between the US and Iran. Specifically, there were news around an explosion at Iran's Bandar Abbas port, uh, and this weighed heavily on risk sentiment. Now, even though officials denied any external involvement, the timing and lack of clarity raised fears of a sort of, broader US-Iran escalation, and that uncertainty prompted a short-term flight to safety. Now, layered on top of this was another key development coming out of the US, and this one directly impacted monetary policy expectations. Right now, for a while, there had been speculation around Kevin Walsh, but potentially becoming the next Fed chair. That uncertainty alone was enough to, unsettle the markets. But once Donald Trump officially confirmed this nomination, that ambiguity actually disappeared and markets were forced to react, right? Before this, a lot of the chatter had, centered around Rick Ryder from BlackRock. Now, that narrative suggested, some sort of continuity and stability, a Fed that would stay relatively supportive if growth slowed. Now, Wash's confirmation changed that tone almost overnight. See, the thing is, he's widely viewed as more hawkish, right? More focused on inflation, discipline, and policy credibility. And markets ultimately took this as a signal that rates may stay higher for longer with less urgency around easing. And this matters a lot. This matters a lot for crypto, right? Uh, this market is extremely sensitive to shifts in monetary expectations. Even if small changes in how markets view future liquidity, this can have outsized effects, right? Especially when positioning is already massively stretched. Now, with this news, we saw that play out almost immediately in the US dollar, right? We saw we saw that the dollar strengthened against major currencies. The DXY ticking higher as traders adjusted expectations around interest rates and future liquidity conditions, right? And that's not a great backdrop for crypto either, right? Historically, crypto and the dollar tend to move in opposite directions. When the dollar strengthens, investors usually de-risk. Capital rotates back into dollar denominated assets or safer instruments. So when you put all of this together, a stronger dollar, tighter policy expectations, broken technical levels, it becomes much clearer why the market struggled to find its footing. And that's why this move felt so decisive. And I mean, not to mention as well, we also had a dose of FUD, right? From a place I genuinely did not have on my bingo card for this year. Now, over the weekend, the US Department of Justice released a fresh batch of around 3.5 million documents linked to Epstein files. What we saw shortly after were claims circulating online suggesting that Epstein may have appeared in conversations connected to Bitcoin and crypto's early years. And of course, almost instantly, speculation just took over. Right? Crypto Twitter did what it always does. Pieces of information were pulled out of context, theories spread like wildfire, and a developing story quickly turned into something traders were suddenly paying very, very close attention to. Even unverified associations can sort of influence sentiment, especially for an industry that's still on the cusp of gaining broader mainstream acceptance. Right? Headlines like this introduce reputational risk, whether they're proven or not. And when markets are already this fragile, that extra layer of uncertainty can really weigh heavily on prices. So, this was another factor that we saw play out. Now, I'll be honest with you, I don't enjoy streams like this. Uh, the uncomfortable nature of where we sit right now is it hurts, right? But that's the reality. And these are the moments that test people the most. Now, from my experience, that's exactly what bear markets do. Right? They test how you behave when things feel extremely uncertain, heavy, and frankly, just downright unpleasant. Right? Now, having said that, there is one thing worth acknowledging at these levels. Right? A lot of major crypto assets are now sitting in extremely oversold territory, right? Uh, and I think that is worth just paying attention to, right? I'm not saying you should ape in just because an indicator says oversold. That's not how you survive markets like this. But if you look at Bitcoin specifically, the 1 day RSI is the most oversold it's been since Bitcoin was trading around 26K, right? And I think what matters right now is perspective, right? You need to think of it from a risk versus reward and positioning, of course. Oversold conditions can persist longer than most people expect, but they also tend to show up when fear is already widespread. Okay. Okay. I know this has been a lot. I'm still trying to digest what's happened today. Uh, this hasn't been one of our typical streams, and I appreciate you sticking through it with me. Uh, I know that if this downside momentum continues, there's going to be a flood of information, right? There's going to be a flood of headlines, opinions, and downright misinformation flying around everywhere as well. That's exactly why I want to point you towards our daily newsletter, right? So if you go onto our website, you see newsletter here. You just have to click that and subscribe by just entering your email, and you'll get the most important crypto news delivered straight to your inbox every day. Okay. We also have the link to our newsletter in the bio below, so do check that out. Uh, the reason I'm saying this, right, in periods like this, I think it's very important to stay grounded, right? Super important to also stay calm and selective in the news that you consume, right? And that's exactly what these daily newsletters do. We give you the most important crypto news delivered to you so that you're aware of what's actually happening in the market and why things are moving the way they are, right? Now, I hope this stream gave you some perspective on where things stand. Um, just remember, markets don't reward emotion. It's very easy to get swayed by emotion right now with prices coming down dramatically. But what they do reward, and I've seen this play out time and time again, is patience with an equal dose of preparation. Right? On that note, guys, stay safe out there. Um, it could get a lot more volatile, and accordingly, trade wisely. I will see you all next week. Until then, folks, bye bye.